Good afternoon, everyone. Gabe Velazquez here with you, transparenttradesolutions.com on a Tuesday. This is 7th January. Let's get into the markets again, back and forth trading. Let's get right into the charts here. Again, subscribe to the newsletter. I did write about rates last weekend. If you haven't or subscribed to the newsletter, I did mention that could be the trigger. Let's start there because rates did jump again today after the JOLTS number. We are approaching some key levels on the 10-year yields. You can see right around 475. You could squarely point to that as a culprit why stocks are down again. Whether we break through that would be depending on the non-farm payrolls number on Friday. If that's a really strong number, in other words, if we have a more than 150,000 jobs, or the employment rate drops below, let's say 4.3, comes in at 4.1. I think rates probably ultimately go to 5. That could be again another trigger. However, here's the deal on the S&P, simply in a massive trading range. This is the way I'm looking at it with members. Until we break below 58.65, we are generally just going to be chopping around back and forth, and wouldn't surprise me. Today, NVIDIA also got hit pretty hard after the speech from last night. I think that's coupled with rates and so forth. But generally speaking, we still haven't made any progress outside of this range here. We came up to this level here and pulled back about 100 points. Now we're trying to rally. Wouldn't surprise me if we go back and forth. Even tomorrow we get another rally. So this is the way I would see the markets right now, back and forth churning, and we've got CPI next week, and then obviously the big day would be Jan 20 with Trump taking office and so forth. So all in all, you can see the big back and forth trading. VIX is kind of jumping, but nowhere near like 20 or whatever. Maybe we just kind of trade in here also. Sentiment is still pretty extended. The ISEE number still over 200. I've been talking about that, and anytime we get these numbers, the market just sells off. We just can't make any progress. But that's that push-pull kind of tug of war between the optimism with the new administration and the continued persistent, call buying is going to probably continue to push these markets sideways here. The dollar, nothing new there. This is also kind of an interest rate story. If rates continue higher, the dollar probably going to break out here. On the longer term chart, we're kind of consolidating back and forth. We got support here at 107.60. Whether this continues also is going to be a headwind for stocks, I believe. We had a decent move in the British pound, which I think I mentioned some of our members. We got out of our target. If you watched the recording from last week, our target was right in here. We've already exited that. Tomorrow we've got nat gas inventories and oil. Nat gas is a mess right now, just kind of churning also in the middle part of this massive range between 450, let's call it 425, and $3 MBTU. You can see that the charts are just other than that here. And then oil continues to edge higher. Looks like that's headed maybe towards the 76 level, somewhere right up in here. I'm sorry, 76 or 78, something right in there. And we got a ag report on Friday too that could move the grain market. Soybeans have also been on the radar, maybe possible breakout for that. And all the rest of the markets just similarly just chopping around back and forth. Looks like metals maybe also headed higher. Also copper kind of caught my eye today. Looks like $4 is a key support area here. You can see whether we break out above 433 will be interesting as well. So all in all, lots of chop back and forth. For day traders, probably not a bad thing if you're inclined to do that. back and forth movement. But again, I try to take a little bit longer term view. So we'll see what happens there. In any event, we'll see you next Friday. Again, reminder, we have Thursday off. Markets are closed. Futures markets will be open, but the stock market will be closed on Thursday. And then we come in on Friday with the non-farm payrolls, which should, again, move the markets pretty. Any big surprise on the non-farm payrolls could, again, trigger possibly that breakout outside of these massive ranges. Okay, have a great week, and we'll see you on Friday. Again, subscribe to the newsletter, give me a thumbs up, put some commentary, and so on and so forth. Take care.